Hey there, I am S Tier Trader and welcome to my second trade review. This time I moved away from the Forex asset class and shorted an index future, specifically the E-mini S&P 500 March contract, otherwise known as the SPOOS. Just like last time, you're going to see a completely transparent trade where you will watch my entry all the way down into the take profit or stop loss, whatever comes first. You can compare your own charts to mine by entering in ESH2022 on tradingview.com. The trade itself took place on February 3rd, 2022. If you are still skeptical for whatever reason, that's totally fine. Just note that I have a personal clock in the bottom right corner of the video. Unlike the last trade though, I did have to make an edit in the later half of the video. I'll talk about it when we get there, but it was strictly for presentation purposes only. It did nothing to alter my trade in any way. Alright, let's get started. You'll see a few differences from this trade compared to my Euro trade from last week. First, not only am I trading a different asset class, but the time of my execution is also completely different. This time around, I am trading just before the stock market opens up at 9:30 a.m. Eastern Standard Time. In my last video, I executed my trade and then went to sleep. This go around, I executed my trade and then I went to work. My protocol tells me that I can either trade at midnight my time or 7:30 a.m. my time. Those are the two optimal ranges for me to work within, and I've had to learn to work around the barriers of sleep and work. It's been a difficult process, but I finally feel like I'm in a place where I can manage and overcome those two barriers. I am also fortunate enough to live a 5-minute walk away from my work that starts at 8 a.m. my time. This allows me to trade the first 20 minutes of the stock market opening. In this case, I have a sell at market order ready to go if price retraces to my entry. I have one eye on price action and another eye on getting myself ready for work. Note in the bottom right hand corner of the chart that my market order has not yet been executed, and therefore I am not actually in the trade just yet. I am waiting for price to run higher at 9:30 a.m. before my trade actually executes. 9:30 a.m. comes around and price doesn't actually retrace. This means that I will need to switch from my sell at market order to a sell limit order. This is because I need to shower before going to work. The limit order allows me to enter in the trade should price run to my entry while I'm away from the computer. This actually happens in this case. Price does run into my entry, triggers my sell limit order, and now I'm officially in the trade. I finish getting ready and off to work I go. Here's another difference from last week's trade. Instead of catching the high like I did last week, I went through 16 handles of drawdown with my stop nearly taken out. This trade was certainly a bit more stressful than last week's. You might also notice that my mouse got nudged. Well, this is because my beautiful, fantastic wife began studying her university classes in our shared office. She likely nudged the mouse as she was setting up her laptop. She also sends me photos of the trade throughout the day per my request so that I can keep tabs on the recording. More on her in a few minutes. Well, my trade is certainly not doing so hot at this point, and now's a good time to discuss something that I struggle with psychology wise. I would love to be the trader that can just set it and forget it. Set it and forget it. ICT uses that phrase every so often. What that means is that you enter a trade and you let your stop and take profit protocols do its thing. Either price hits the stop or it hits your take profit, and you don't pay any attention to the price movement in between. Set it and forget it. Instead, though, personally, I'll often look at the price quotes throughout the day and experience the emotions associated with it. Price goes in my favor, and I'm a happy guy. Price goes against me, and then I start becoming slightly stressed. I have certainly improved on the emotional component of this, but there is definitely room for me to improve by not requiring myself to check in on my trades as frequently when I'm away from the chart. This is actually a big reason why I have navigated myself into becoming a day trader rather than the swing or short term trader that I initially thought I would be. I joined the mentorship thinking I was going to be that one shot, one kill sniper trader, and instead it's day trading all the way for me now. With my trade not doing so hot, I certainly had some doubts whether or not if I was on side. Had I been at home instead of at work, I likely would have taken a large partial here. I actively have to tell myself that there is a reason why my stop is placed where it is. I have to trust my technical analysis, and if my stop gets hit, great, it did its job. But until my stop gets hit, I'm still on side. Nothing has changed. I am still bearish for the day. However, I can have some concern that price is not running through lows like it did in my last trade. While my last trade was like a knife slicing through hot butter, this trade is currently very slow and very choppy. The AM session comes to a close as the New York lunch period begins. My protocol tells me that I need to have a partial taken and reduce my position size heading into lunch. ICT teaches that we do not want to be entering trades or having large positions on before heading into the index futures lunch period. Because I am at work, however, I cannot manage my trade the way I would like to. This is the same takeaway as last week that I need to improve on somehow. Price could have easily reversed after lunch and ran into my stop, with me not having taken any partials whatsoever. I generally do not want to be participating in the New York lunch period, and yet here I am, 100% of my position on, holding through the lunchtime period. It will be important for me to not turn this into a habit. All right, here is the incoming edit that I talked about during the intro. It is just after New York lunch, and price is trading in my favor. Price is hovering around the 4,500 big figure when life gets in the way. My beautiful, fantastic wife decided that she needed to use the desktop computer, where I am recording Price, to watch her sociology lecture. She uses the desktop for just over 2 hours with my screen recording away, capturing the whole lecture. While you can see the actual price of the spoos in the top left corner, she also conveniently puts up a menu over the price so that we can no longer see it. So I decided to make an edit. This is for two reasons. First, I doubt you want to actually sit through a sociology lecture on Srolli's scale for measuring anomia. And second, there might be personal information that appears during this time. It is actually quite funny and ironic this happens just 3 days after ICT released his Trading with Family Distractions video, which you can watch here. Luckily, this situation doesn't affect my trade in any way and only affects 2 hours of watching price delivery. I can tell you that during this time, price consolidated and did not go any higher than 45.10. If you don't believe me, please feel free to refer to your own charts found on tradingview.com. Eventually, I come home for lunch and notice what has happened. Price is hovering at 44.85 at this point. Note that none of my lines have changed at all while the edit has happened. My sell limit order has stayed the same, my stop stayed the same, etc. I came home for lunch here as I am tracking the close of the trading day. As we have learned in ICT's mentorship video number 5, there are mechanisms in place that accelerate price right into the close. Ideally, I would have taken a profit before New York lunch and a smaller one again after New York lunch. Because of what happened with my screen recording and wanting to be completely transparent with you guys, I chose not to take a partial headed into the close. I didn't want to deviate too far from my initial trade and confuse the viewer. You'll notice though that I did allocate 100% of my position to close at my first target. This is due to time of day. I knew the stock market was closing, so it is in my best interest to be done my day trade at the end of the PM session. Remember when I talked about time and price in the how to chart video? The time component paired with my target potentially being met was the reason for this adjustment. In the final 15 minutes of the session, price runs through my target. My trade has now been completely closed at 43 handles. This happened thanks to the acceleration mechanism in price we just discussed. And wow, am I ever glad I took my full position off here. Watch how price completely reverses back into my initial entry. Had I left a partial on, my protocol states that I would have moved my stop to break even. I actually discussed this in the last video. If I moved my stop to break even, this means that I would have been stopped out on the trade once it reversed. Instead, I followed my time protocols and they worked to perfection. Let's talk about two pros that I can take away from this trade. First, I am up a combined 89 pips and handles gross in the last 2 weeks. My net pips and handles are 74. We discussed last week that we only need 90 pips in a month to double our money every single year. We've nearly hit this threshold in 2 trades. We've also done this in situations where I cannot properly manage my trade and where I am away from the charts for the majority of the time. We must also note that this is a small sample size for our model, and more work will need to be done to see if this is consistently profitable. But so far, we are executing it very well and seeing promising results. It is very gratifying to see that even if I can't be in front of the charts during the majority of my trade, I can still meet and exceed my trading goals that will allow me to become a professional trader. Another pro that I can take away from this is how I traded the higher time frame directional bias. Price had moved bullishly during the week, over 150 handles. I managed to determine where the weekly range high was likely to be formed and short it in the opposite direction. I am not sure many retail or professional traders would be willing to take a short after the market had roared higher after 4 consecutive up close days, much less exactly time where the high would be. We are going to learn more about the directional bias next week in the YouTube mentorship, and you may be able to see the reasoning why I pinpointed this day and price level for a potential reversal. The biggest improvement that I can take away from this trade is once again trade management. We discussed this earlier on in the video. While the trade happened to work out really well for me this time, price could have easily wiped me out during the PM session without me even have taken a partial. This is especially true with the high amount of volatility we've seen in the index futures. I will need to continue to work on how I can effectively manage my trades while I am away from the charts. And one more other takeaway is figuring out how I can record price action without the screen interruption. My first thought is that I will need a second monitor, but I will look into this and hopefully find a solution sooner than later. Let's wind this up. 2 trades in 2 weeks with both being large winners. If you want to see more of this, please go long on the like and subscribe buttons. I will certainly take a loss soon, and when it happens, you will see it on this channel as well. I'll have a video coming out on recording price action very soon, so stay tuned for that. If you have any ideas on how I can make these videos better, or how I can overcome my weaknesses that I've identified, please let me know. With that said, keep studying the mentorship hard. It is very much worth it. Good luck and good trading. If you want to watch the first video of this series where I hit 46 pips in the euro, click the video on the left. If you want to begin your journey to becoming a professional trader, click the video on the right. Please go along on the like and subscribe buttons. Thanks for watching.